Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's start with the big up move that's come in. Most of the Asian markets are doing well, but look at the SGX Nifty. It's trading up over 100 points. It's no doubt it's come off the highs of the day, but nevertheless expect a strong start from our market, at least above the 10,300 mark when we open for trade. Most of the ADRs ended with a positive bias. Vedanta was up 1%, HDFC, Infosys, all of them being up close to 1%. What didn't do well was Tata Motors, which was trading flat in trade, so not a bad day for the ADRs. Now, crude rallied over 3% on Friday. Again, in today's trade, it's trading up close to 0.5%. So Brent is about the $65 barrel per mark, and WTI is trading about the $62 barrel per mark. An extremely strong close by base metals on the LME. Nickel was up almost 4.5%. Apart from it, the other base metals did well. You had aluminium, which was up close to 1%. The other base metals also managed to do well. Now, if you're looking at most of them, copper was up almost 2%. Zinc was up almost 1.5%. Nickel was up almost close to 5%. Lead was up almost 1.6%. Tin was the only one that managed to end with a negative bias. Now, if you're looking at what's happening in China currently, copper has managed to rally over 1%. Zinc is up almost 0.6%, but weak opening by aluminium as well as steel currently. Most of the precious metals are trading absolutely flat in today's trade. FIIs were net buyers on Friday. They bought in almost 550 crores. DII sold in 65 crores in the cash market. Now, overall, the market did crack in the second half of trade, and there was weakness led by banks. So the Nifty Bank was down in trade. The mid caps and small caps also saw selling pressure that came in. Apart from it, the PSU Bank and Nifty Metal managed to fall in trade significantly. Now, the IT index was something that did well. It was up close to 0.5%. The other factor is the WIX. The WIX ended flat in trade since the market was absolutely flat in trade. As far as the Nifty was concerned, it was down 15 points, but majority of the contribution on the positive side came in from Reliance, which contributed 20 points. ICICI Bank, HDFC and HDFC Bank managed to rally in trade. But there was a lot of long unwinding that was seen on the markets. The Nifty and the Bank Nifty, both of them. So long unwinding that came in. Open interest was down 1% for the Nifty. As far as the Bank Nifty was concerned, it was down almost 0.5%. Now, if you're looking at where positions were taken, you can see it's clearly between the 10,200 and 10,300 mark in trade. That is where above the 10,300 mark, there is a lot of resistance coming in, and at solid support coming in at the 10,200 mark in trade. If you saw what happened on Friday in terms of open interest build up, you can see that it was again between the 10,200 and 10,300 mark in trade. The call writers were active at levels of 10,300, while put writers were active at levels of 10,200, indicating that it will be a range-bound trade. But with a 100-point gap up opening in trade, again, you might see that the red lines may start coming in at 10,300 and 10,400. The PCR managed to be same for the Nifty, but as the Nifty Bank was weak in trade, the Nifty Bank PCR fell in from 0.94 to 0.81. Stocks in focus, there are two stocks as far as the FNO ban is concerned. JP Associate comes in the FNO ban, and HDL goes out of the FNO ban. The other stocks in focus that you need to watch out, the first of them is Torrent Pharma. Open interest build-up of 27% on the long side. High open interest build-up is seen on the counter. You had ACC with some fresh buying, on which saw fresh shorts. Open interest build-up was 10%. You had IGL with saw fresh shorts. Open interest build-up was almost 6% in trade. Kajaria Ceramics saw short covering. Open interest was down almost 10%. You had Jubilant Foodworks which was up in trade, but very negligible open interest build-up was seen on the counter. And Reliance Communication saw open interest build-up flat, but was down almost 10% in trade. So that's the view that's coming in from the FNO side. But in global news, China has officially removed its presidential term limits. The National People's Congress chose to abolish the two-term 10-year limit for presidents on Sunday. This has paved way for China's president to hold that position indefinitely. Only 5 delegates out of the almost 33,000 voted against the measure. Tom McKinsey of Bloomberg News talks about the implication of this report.
And it was announced, of course, by the Central Committee a couple of weeks ago, and it was going to be put to the vote as it was on Sunday to the National People's Congress. And, of course, we knew that they were going to rubber stamp it, and that's exactly what they did. 3,000 delegates approximately in the hall, 2 who were voted against, 3 abstentions, and therefore we see this change in constitution that, as you say, removes these term limits on the presidency here in China. This upends 3 decades of concessions, or a system, I should say, that was focused on consensus building, collective decision making and smooth succession from one leader to the next. That has been scrapped by this decision. I spoke to some of the delegates as they left the Great Hall of the People. They said this showed the development of China and it showed the will of the people. Of course, the people haven't actually been asked about this decision, but the thinking from the party is that already President Xi is head of the military. There are no term limits on that role, and he's already head of the party, the most powerful position here in China. There are no term limits on that. So it only makes sense, according to the party, to remove term limits on the presidency. And others have said this allows President Xi, gives him the space and time to pursue his agenda, whether that's inserting the party more thoroughly throughout society here, or tackling issues like debt and pollution and giving him that clout on the global stage. Others say that there are long-term risks to this strategy, having too much power in one man's hands. It was exactly what Deng Xiaoping, the former paramount leader here in China, warned about back in the 1980s, and that's exactly why Deng Xiaoping crafted this plan for collective decision-making that has now come to an end. So, as ever in China, it's a question of stability, at least in the time being, but at what cost?
Good question, Tom. But the Commerce Minister also had something to say about trade over the weekend. Tell us more about those comments.
That's right. So Zhongshan, he's the trade minister, the commerce minister here in Beijing. He really underlined what China sees as the grave risks of a trade war should it materialize between China and the US. Take a listen to what he had to say.
There is no winner in a trade war. A trade war will only bring disaster to China, U.S., and the global economy. China doesn't want a trade war and will not start a trade war first. But we can handle any challenge and will firmly defend the interests of our nation and our people.
So Zhongshan also saying that the US overestimated its deficit with China. Clearly, this is a big bugbear for President Trump. The commerce minister here in China, though, saying the deficit was overinflated by his US counterparts by about 20% because of some statistical anomalies. He also said that if the US was to remove controls on high-tech exports from the US to China, that could reduce the deficit by 35%. He was asked about potential retaliatory measures, for example, restricting purchases of Boeing aircraft or restricting imports of US agricultural products. He wasn't drawn on that. He did say that many sectors of the Chinese economy do remain more closed off, like autos and telecoms, but he said that's because China is in a different developmental stage. He also pledged and promised that the commitment to open up the financial sector here would be pushed through.
Amber Enterprises is the stock of the day today. The company reported their third quarter numbers on Friday post-market hours, and taking a look at the numbers, their revenues adjusted for excise came in about 64% lower at 338 crore rupees versus 945 crores. And net profit saw a sharp fall of about 91%, coming in at about just 10 lakh crores versus over 1 crore, which they did in the same quarter last year. EBITDA too saw a similar fall of more than halved to 24 crore rupees versus 69 crores. And also their margins were largely stable, coming in at about 7.1%, so about a 20 basis point cut there. So basically, all in all, it was a disappointing quarter for Amber Enterprises, led by that sharp fall in its top line and a higher raw material cost, which as a percentage of its total sales was up about 600 basis points, coming in at about 86%. Margins, as I said, were largely stable owing to a fall in their finance cost and other expenses. Their finance expense was down about 60%, coming in at about 17 crore rupees, while their other expenses too were down over 2/3%, coming in at about 19 crore rupees versus 59 crores. In a separate development, the company said that it would be acquiring 70% stake in Ever Electronics in one or more tranches for a total consideration of about 21 crore rupees. Now the deal is going to be an all cash, and the transaction is expected to be completed by the end of June this year and would make it its second acquisition since December. But that's that as far as your Amber Enterprises, the stock of the day, is concerned. We move on to Saloni to get us all the currency cues.
Thanks for that, Yash. So speaking of Indian rupee, it was tracking losses in the Asian currencies market on Friday, and it ended marginally lower at 65.17 levels against the dollar. Now remember, for the week, the home currency ended almost unchanged against the greenback, despite touching a fresh one-month low during the week. All eyes will be on retail inflation data today. it is expected to ace to 4.74% as compared to 5.07% seen last month, according to a Bloomberg survey. Well, speaking of the bond market, sovereign bonds logged their first weekly gain in 4 last week on the back of improving liquidity after Indian government pitched for a rating upgrade to Fitch officials last week, and hence we have seen yield on 10-year benchmark security dropping nearly 7 basis points to 7.67%. Well, on the global front, dollar index advanced higher for the third straight week, and it ended steady near 90.10 levels despite a mixed report on US employment. Elsewhere, pound extended gains above 1.38 mark on the back of better than expected UK manufacturing data. And lastly, coming back home, dollar rupee is trading at 64.98 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade. Well, having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up from this space today morning?
Morning, Saloni. So it was a good Friday as far as base metals were concerned. The LME base metal index climbed more than 1.5%, but the rally was not enough for most of the base metals to post weekly gains. Now, as far as individual base metals are concerned, nickel, that was the top gainer in trade and surged as much as 5%, and that was the most since Feb 14th. Zinc, lead and tin posted its third weekly loss, while aluminium posted its second weekly loss in last 3 weeks, and copper posted its first weekly gain in about 3 weeks. As far as precious metals are concerned, we saw that gold actually snapped its 2-week losing streak by ending marginally positive for the entire week and stabilized above the 1320 mark. Now, moving on to the oil prices, we saw a big surge come about for oil prices on Friday, along with the equities. Now, this was on the back of outlook for strong demand coming in from the US market. What also boosted oil prices was the weaker dollar, and on account of both these factors, WTI futures actually climbed more than 3%, and we are seeing an extension of those gains come about in early Asian hours.
Well, the U.S. Department of Commerce has suggested a hike in anti-dumping duty on Indian shrimp from the current 0.84% to 2.34%. So watch out for names like Apex Frozen Food, Avanti Feeds and Waterbase on the back of this development. Apex Frozen has maximum exposure. About 75% of the revenues come from U.S. So watch out for that name on the back of this development. You also have a JSW Group unit which will be buying 50% stake in Delhi Daredevils, which is the IPL team from GMR Group. So watch out for GMR in trade today. According to a PTI report, you have Jet Airways, Air France, KLM and Delta Consortium, which has shown some interest in bidding for Air India. So watch out for Jet Airways in trade today. You could see some negative reaction coming on Aarti Drugs. Now, they have said that the unit was adversely hit by a blast which happened in the adjoining unit at Tarapur. Currently, they are still assessing the extent of the damage, but given that about 16% of the revenues come from this unit alone, you could see a sizable negative reaction as far as Aarti Drugs is concerned. MOIL has said that they have received the nod to set up ferroalloy plants at Balaghat and Gumgaon for 419 crores. That apart, we're also watching out for DB Realty. Now, this is on the back of an ET report which says that DB Realty is in talk with Rustomjee for joint development of Mumbai housing projects. So watch out for that name. NTPC, now we have an Indian Express report which says that the company could buy Bihar State Power Holding Company and 2 of its units for about 3,000 crores. So that's NTPC. You also have State Trading Corporation of India, which will be in focus, given that 2 banks, Indian Bank and Union Bank of India, have classified the company as an NPA as of 1st March 2018. That's on account of non-payment of interest arrears, and which also means that these banks will not really be sanctioning any further loans to the company. The company has said that it is already in the process of restructuring some existing debts, but we could see some further negative reaction on that one. Lastly, we're also watching out for Ester Industries. Now, they will meet Ashish Kacholia's Lucky Investment and also the Visaria Family Trust today, so watch out for that name as well.
On the big brokerage calls for the day, first we have is Morgan Stanley on the telecom sector. Now, according to the brokerage, because of competition, the average revenue per user, that is the ARPU, is expected to trend down for the next few quarters and will only start improving from the second half of financial year 2019. Now, in the current market scenario, according to the brokerage, Airtel is well positioned among the other players, and as valuations have corrected sharply for the company. Also, when it comes to Airtel, leverage is not of concern as it has enough options to raise cash, says the brokerage. Now, the brokerage is also expecting that there would be a limited impact of Jio phone offerings on the telecom operators, and the Jio phone could only put a dent if Jio goes on to reduce the upfront payment that the customer has to pay on Jio phone. On Bharti Infratel, it is saying that the stock is underperforming as the next 2-3 quarters it will see an impact of tenancy deletion because of consolidation in the telecom service provider space. And lastly, it says that the current valuations of Bharti Infratels are cheap and the stock may be getting close to the buy zone. Second we have is Motilal Oswal on SH Kelkar. Now, the brokerage has maintained its buy rating on the stock but has reduced the target price to 318 from 343. Now, the brokerage says that structurally the business of the company is secure, but there are some near-term headwinds for the company. It says that there are supply side disruption from Germany, US and China which could lead to margin pressures over the next 2 to 3 quarters. On the back of this expected raw material supply disruption, the brokerage has cut the EBITDA estimates for financial year 2019 and has also reduced the margin estimates by around 700 basis points for financial year 2019. On the business side, it says that the 51% stake acquisition in the CFF brings in cross-selling opportunity for SH Kelkar. And lastly, going forward, it says that new launches in the FMCG will pave way for improved growth for SH Kelkar. Now let's go over to Nikunj for all the GST updates over
The GST Council has decided to implement the e-way bill mechanism for interstate movement of goods from April 1 as recommended by the group of ministers headed by Mr. Sushil Modi. For intrastate movement of goods, the GST Council has decided that states would be divided in 4 categories, and the e-way bill mechanism would be implemented in a staggered manner, and states will be given time till June 1 to roll out the e-way bill mechanism for movement of goods within states. Another important item on the GST Council's agenda was simplification of the return filing framework, but the GST Council could not make a decision as to what would be the new return filing framework. But however, they've extended the GSTR 3B and GSTR 1 return filing framework for another 3 months, and the simplification of the return filing framework has been given. The task for simplifying the return filing framework has been given again to the group of ministers on information technology headed by Mr. Sushil Modi. Now, other important items on the agenda were taxing extra neutral alcohol and bringing aviation turbine fuel under the GST's ambit, and the GST Council could not take a decision, and these items would be taken up by the GST Council in its next meeting.
1st of April is significant in terms of e-way bill for interstate. For intrastate, there have been lots, and states have been clubbed in 5 or 6 together, by and large by option, because up to the 1st of June, they can join at any time. But it's been done in lots with a week's gap to roll it out, so that you'll have it in a phased manner and it won't be too much load and pressure.
Your revenues are not growing as expected, and that's primarily because there has been a sharp cut in the rates in the month of November.
Yeah.
But despite the cut in the rates, the tax base was supposed to expand and revenues to be buoyant, but it shows there is serious leakage in the revenues taking place. E-way bill coming in will stem it to a greater extent.
For return filing, to make it simple, I think 2 models have emerged in the last 2-3 months. One emerging from Mr. Nilekani, and one which is loosely you can call it tax administration model. The political executive in some ways is more comfortable with the Nandan Nilekani model. It's a simpler model, but the tax administration thinks it will lead to larger evasion. So I think some more time is being evolved to work out a simplification of the return filing. That's the biggest decision. Second big decision really is about the RCM. It has been deferred till 1st July.
अभी जो योजना बनी है उसमें 1 जून के बाद से इंटरेस्ट रेट तो लागू हो जाएगा. इंटरेस्ट रेट भी ये लोग फेज वाइज मैनर में करने की कोशिश कर रहे हैं. दिल्ली में मुझे लगता नहीं कि हमको ज़रूरत है इंटरेस्ट रेट की. सो अभी तो हमारा मतलब पूरा विरोध है कि हम इंटरेस्ट रेट दिल्ली में नहीं लागू करना चाहते.
So it will begin from April 1, but it will be done in a phased manner with several states coming on board. I think there's a schedule worked out. As per the schedule, there are, I think, 3 batches of states. So they will go on adding them, and so that if there is any system problem, it will be attended to before it is fully scaled up. So there's a staggered approach, so there should not be any repetition of any glitches in the system. Okay.
Over 50,000 farmers are right now in the heart of the financial capital, some of whom have walked from all the way from Nasik and want the government to announce a complete farm loan waiver and implement the Swaminathan Committee's recommendations at the earliest. Purva Chitnis joins us from their Azad Maidan with the updates.
Yes, so right now what we get to hear from the organizers is that they are going to stay here until 12 noon, and after about noon the delegation or the representative of the farmers would go and meet the government at the Vidhan Sabha. So the original strategy of gherawing the Vidhan Sabha, the state assembly, is right now put to hold because they expect the government would, the government has extended their support as well, like all other political parties have extended their support. So even the government has showed some solidarity towards these farmers. So they are going to expect, they're going to meet the government, and after what, if the government meets their demand, only then they will take the strategy forward. But right now, as we all know, that about 20,000 people started off from Nashik and they have reached here in Mumbai. The organizers are saying that the number has swelled to anywhere above 50,000 or 75,000 as well. So right now it's interesting to see what the government would do in this manner. Like the Chief Minister as well has already said that he is ready to listen to them and even meet the demands, and he's also formed a committee to look into this. So now it's just time that these farmers are going to stay here and just wait it out to what the government would do.
Purva, thank you so much for bringing us those details, but there's lots to talk about over the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The Reserve Bank of India has initiated a special audit of state-owned lenders with focus on trade financing activities, especially relating to the issuance of letters of undertaking by them. Foreign investors have pulled out nearly 6,000 crores from the Indian capital markets in just 6 trading days of this month, primarily due to better opportunities in other emerging nations. All right, that brings us to the end of this show, but stay tuned in. First Word starts at 8.